it doesn't matter where the money, which banks the money flow towards, it's going into the banking system. It's inconsequential that we call the banks by different names, but overall, there's only one banking system on planet. It's the central banking system.
My name is Vernon McCarty, and I am a member of the Ascendant Financial team. I'm blessed beyond the definition of good fortune to be working with good people just like you every single day, coaching them on the process of becoming your own banker. I want you to think for a second, think about your money. If you were going to ask somebody, just an ordinary person, where do people keep their money? Well, they might say in a bank. And as you know, that is the theme of our discussion tonight, becoming your own banker. Many times when people hear that, becoming your own banker, they're not exactly sure what that means. How could I become my own banker? If you think about that for a second, think about what banks do. Banks receive deposits, they lend money out, and they create streams of income. So what if you could just do all of that on your own, become your own banker? And that's going to be the theme of our discussion tonight, becoming your own banker. And one of the things that happens when you receive a new idea or a different way of thinking about things, you have to be able to remove an old way of thinking so that a new way of thinking can take its place. And as you probably know, for some people, that's just not an easy thing to do. I mean, look what happened when the pandemic hit North America in 2020. I mean, everybody had to completely change their whole way of life and their whole way of thinking about things. And look what we're doing right now. We're communicating on an electronic platform, a virtual communication platform. A year and a half ago, almost nobody was doing this. But when you can change the way you think and adapt to new ideas, amazing things can happen. And that is what our presenter, Sarbloh Gill, has been doing for more than half a decade, helping people think differently about their money to become their own banker. Sarbloh has qualified for the $1 Million Roundtable for the past number of years, placing him in the top percentage of advisors in Canada. He's a successful real estate investor and an authorized infinite banking practitioner through the Nelson Nash Institute. And Sarbloh and his family no longer rely on commercial banks for any of their financing needs. Sarbloh also trains and coaches new members of our team for the betterment of the Ascendant Financial painted picture vision. And you can read our painted picture vision on our website at ascendantfinancial.ca. I invite you to do that. Sarbloh helps grow people so that they're qualified to help more Canadians just like you. In fact, Sarbloh is responsible directly for a lot of my own development and expanding my capabilities. So I appreciate you for that, Sarbloh. Sarbloh has a unique ability of making complicated things clear and the confusing simple. And there's going to be a lot of things that you're going to hear tonight that will simplify things for you, especially in your financial world. Sarbloh and I collaborate often and work together with people. And I can tell you, especially, when people come and see us, especially our clients, sometimes they show up, feeling a bit confused, or maybe they're upset or even a little bit worried. But after an hour of connecting with us or one of our amazing teammates, they leave with a smile on their face, feeling like the weight of the world has been lifted off their shoulders. Sarbloh has personally helped hundreds of families and business owners just like you, adapt a new way of thinking and become their own banker. And that's what we've done in our practice. We help people think differently about their money and make better financial decisions. Tonight, you're just going to be exposed to new ideas, new ways of thinking about things. No one's going to ask you for any money or anything like that. Please welcome my colleague and good friend, Sarbloh Gill. Take it away, Sarbloh.
Thank you, Varun, for such a warm introduction, and welcome everybody to the webinar on the process of becoming a banker, the infinite banking concept. I'm the speaker for today's session, and my name is Sarbloh Gill. Before I introduce everybody who's attending the webinar today to our Nelson Nash, I want everybody to go through a thinking exercise. It's not complicated. It's just a quick exercise just to get our imagination going. So if I ask you this question, who revolutionized the automobile industry with the invention of Model T? Whose name is coming into your mind's eye right now? If you're thinking of Henry Ford, you're absolutely correct. Now, who created amusement parks and pioneered the cartoon films, including Mickey Mouse? Well, here's a hint. It wasn't Mickey Mouse. If you're thinking of Walt Disney, you're absolutely right. Now, who revolutionized the process that enables you, me, and everybody else to become our own banker? And that name is R. Nelson Nash. R. Nelson Nash is the pioneer and founder of the process of becoming a banker. It's because of his we've been blessed beyond the good definition of good fortune to be mentored directly with Nelson Nash. And because of his coaching and training, we've been able to help several hundreds, in fact, thousands of Canadians implement this process in their lives. And because of this process, they'll never have a bad financial year. But it all began from R. Nelson Nash. If it wasn't for him creating this process, this never would have happened. You never would have been here. I never would be here. Our hats off goes to our mentor, R. Nelson Nash, the pioneer and founder of the process of becoming a banker, the infinite banking concept. Now, Nelson, I'm going to share this quote from Nelson. Now, in 1994, it was 1994 when Nelson and his family got to a stage where they didn't have to rely on any commercial banks for any financing that they required going forward after 1994. But it took them 13 years to get to a stage where they were truly their own banker. And this is what Nelson shares. He says, what a peaceful, stress-free way of life it is when you get the banks out of your life. It took Nelson and his wife, Mary, 13 years to get to a stage where they can control all the financing as it relates to their need for money from their own banking system. And what a peaceful, stress-free way of life it is when you get to that stage in your life. You will know by the end of this webinar that you are capable of becoming your own banker. You will gain clarity on the problem called banking, and you will also gain clarity on the solution called banking. It is a solution if you're able to control the function of banking as it relates to your needs for financing, and you will know exactly what to do. You will feel like this. So this is something a previous attendee had shared with us via an email, and they said, when I attended this webinar and after the webinar, I found hope and a new belief in a way that I can create my own peaceful, stress-free financial life. And what is the opposite of being stress-free? Well, it looks something like this. And our intention is not to make anybody feel like that. Our intention is that everybody is able to get the banks out of your life and live exactly what Nelson is saying, what a peaceful, stress-free way of life it is when you get the banks out of your life. Now, you've been told to put money into mutual funds, stock market. Now, you put all your money into prison, and then you go to someone else's bank when you need the access to more money to build the dream that you want to build for your family and for your business. And that is absurd. I'm telling you today that if you have been handling the control of your money over to someone else, you may not be in the best financial situation right now. But at the same time, it is not your fault. It is not your fault because you didn't know anything about the whole process of becoming a banker up until this point. I didn't know about the process of becoming a banker up until 2015. It's when we discover this process, we take action and we implement it. And it creates a very stress-free way of living when you get the banks out of your life. Now, are you committed to discovering becoming your own banker? Because we have come prepared to teach you and to coach you on the process called becoming your own banker. Commitment goes a long way. If you're committed, there are many great things you can do in life. Now, are you willing to commit to improve anything that you're already doing financially with the implementation of the process of becoming your own banker? When you implement this process in your life, anything that you're doing financially will radically be improved. We're not here to talk about, let's change your objectives, let's not do this. We are not going to do that. What we're going to do is we're going to show you how you can radically improve what you already are doing financially just by adding one step, which is controlling the function of banking in your life. Welcome to commitment. I discovered, no different than anybody else or most of us, I discovered the financial piece, the financial piece with some hardships. It was 2006, to be precise, 25th December 2006, when I first landed in Canada. I was born and raised in India, And I went to school in India to be an engineer. I used to work for a automobile company, and my role was to design car interior. You must be familiar with this company. It's called Suzuki Motor Corporation. I went to school to be an engineer, and I was in automobile industry, and I said, you know what, I want to explore my other opportunities. So I came to University of Alberta to pursue a master's in engineering just because I wanted to get into oil and gas. It was 2007 January when I started my session in University of Alberta. And by the time I graduated, it was end of 2008, beginning of 2009. And we all know what was happening in the world at that time. There was nobody out there offering me a job at that time. I was pretty much on a financial path of ruin at that time because I had all these student loans debt and I wanted to pay it off and I wanted to make progress. So one of my friends introduced me to a company called Best Buy, and you must be familiar with their other sister company called Future Shop at that time. And this friend of mine introduced me to Future Shop, and he said, Sarbloh, until you find a job in your line, maybe perhaps you want to work at Future Shop and see what it is, and maybe perhaps you can move up the corporate ladder and just have retail as an occupation versus an engineering job. And I took that opportunity because I really wanted to provide for my family at that time. I was really struggling financially. Now, as I got into the industry, retail, it was my first exposure, first experience. I worked really, really hard to move up the corporate ladder. And as I started making more money in Future Shop, I started to look at other avenues on where I can put this money to work for the benefit of my family, because I wanted my money to grow. I was working really hard to earn money, but I wanted my money, my savings to grow. So I did everything what the mainstream financial folks at that time taught me. And they said, hey, Sarbloh, what you need to do is you need to diversify. I put money into TFSA. I had put money into RSPs. I had real estate investments at that time. I was also playing in the market, but something just didn't feel right. It just seems like I wasn't making the progress the way I was supposed to. I just felt like I was still working really, really hard. And it wasn't until January 18th of 2016 when I was first introduced to the process of becoming a banker. I had attended Jason Lowe's full day session in Edmonton. And for those of you who don't know Jason is the founder and CEO of Ascendant Financial. And at that time, he used to do a full day live event in Edmonton. So that was my first introduction to this process. And as I spent a whole day with Jason at that event, that was the game-changing experience for me. Because I had discovered one thing that was missing in my equation of creating more family wealth for me. And that was, here's what clicked with me at that session when I was attending the session with Jason, that we cannot get a better rate of return by investing into anything without first controlling the function of banking as it relates to our needs for financing. And at that moment, I started implementing this process in my life. And it amazed me. And that was like the missing link. And as I was implementing the process, I was slowly, gradually taking over the control of the banking function. I approached Jason and I said, hey, Jason, this is something that I want to do full time. I've been wronged about financial stuff over the years. And I want to share this message with my friends and family so that I can set them up for success. And Jason was kind enough to take me under his wing, and he coached me and mentored me for 1 full year. He basically told me, Sarbloh, go buy a bucket of glue from Home Depot and just glue yourself to my hip. And I spent 1 year with him being an expert, learning to be an expert in this process. And ever since, I've helped several thousand Canadians implement this process in their lives personally and corporately. If it wasn't because of that session that I attended on 2016, Jan, I never would have discovered this process. And I look back and I said, what intrigued me to attend the session was I was more like a sponge. I wanted to learn all the time. So I wasn't suffering with a human condition called arrival syndrome. I always wanted to learn. So just because of my open mind, I was able to grasp this process. So take this time that we have together with an open mind. And as questions come up for you, please feel free to share those questions in the Q&A section. And one will be happy to moderate those questions for us. All right. Thank you for allowing me to share. It just feels good to just share the experience that I've had with this process. Now, before I get into the content, I just want to share that me and my wife, we've implemented this process in our life back in 2016, and it took us 5 years to get to a stage now that we don't have to rely on banks for any major financing. We do all our financing. And speaking back to what Nelson was sharing, it's a peaceful existence once we're able to get the banks out of our life. And now I'm truly making progress financially for my family. Well, most people believe they need someone else to take care of their money. That's what I believed at that time too. Most people believe it is necessary to take risks with their money in order to grow the money. Now, most people know next to nothing about the process of banking and its importance to their lives in their well-being. Here's some of the truths. Now, truth number one, the difference between you getting stressed or staying relaxed financially is if you are the one controlling the banking function in your life. Truth number two, you don't have to put your money in prison for decades and rely on someone else to achieve the financial abundance you deserve today. Here's the truth number three, you don't have to be rich to get into the process of becoming your own banker, because banking is not a product. You don't buy a bank, you participate in the process of banking. We haven't met an individual who we cannot help because you're not buying a bank, you're just participating in controlling the function of banking. So you don't have to be rich to get into the banking function or controlling the banking function as it relates to your family's needs for financing. Who is this for? This is for you. Anybody who wants to radically transform what you're doing financially already, this is for you. Anything that you already are doing, just by implementing this process in your life, you can radically improve what you're doing financially already. Now, how did the infinite banking process got started? Now, some of you on the webinar today, you may recall the 1980s era. Now, if not, maybe your parents or your grandparents must have shared that experience with you. So in 1980s, the interest rates had skyrocketed, the inflation had skyrocketed. The interest rates were peaking at 21.46% back in 1981. And Nelson, the pioneer and founder of this process, he had $500,000 in loan that he owed the bank on his investment properties at that time. He had done really, really well with buying real estate because he did what the mainstream people, financial gurus at that time told him. You know, it's all about other people's money. Take other people's money, use their money to buy the investment properties. Properties are going to appreciate. Someone else is going to pay the mortgage down for you. You're going to have cash flow. So he did everything that the mainstream financial gurus were teaching him. But nobody taught him what would happen if the interest lever went the other way. When the interest rates hit 21.46% back in 1981, and he owed $500,000 to the commercial bank, you can imagine the interest alone that he owed the bank. And that would keep anybody stressed and awake over a period of time. Now, Nelson didn't know at that time that he already had the solution to the problem. The problem was not just that the interest rates skyrocketed to 21.46%. The problem was also that he wasn't the one controlling the banking function over those transactions. Someone else was controlling the banking function, and because the interest rates skyrocketed, Nelson got into that situation. Now, the solution to the problem that he already had in front of him was a participating dividend paying whole life policy with cash values. And he at that time, he realized that he could take a policy loan from insurance company at 8% and use insurance company's money to pay off the snakes and dragons called the commercial banks. He was able to borrow money at 8% and pay off the banks at 21.46%. The solution was just right in front of him. He just didn't know what he had at that time. And that's what gave birth to the process of becoming your own banker, the infinite banking concept. Everyone needs a heart. Would you agree? I want to tell you a little bit of story. At some point in Nelson's life, what had happened was his heart was blocked from all four chambers. And the surgeons had to perform an operation. They had to perform a procedure. And what had to happen was they had to take his heart out of his chest cavity and then work on it. And then while the heart was out of his chest cavity, Nelson was put on a heart and lung machine. The heart and lung machine was pumping and circulating the blood through his body. Now, he doesn't remember the procedure because he was heavily sedated, but he shared with us, he said, guys, at that time, I was merely surviving. I wasn't truly living. I was merely surviving. I was dependent on the heart and lung machine to pump the blood through my system. So if today someone else's banking system is pumping the money towards you, then someone else's banking system controls the flow of money, that may be equivalent to living on a heart and lung machine for you financially. Banking is the most important business in the world. You cannot, I repeat, you cannot get a better rate of return investing into anything without first controlling the function of banking in your life. The banking system pumps the money to where it's needed. And at some point, it flows through your hands and mine hands, and then it ends up right back into the banking system. Now, the banking system pumps the money to where it's needed. It's the banking system that decides how to flow and control the money. And at some point, it goes through your hands and it ends up right back where? Where does the money end up? Right back into the banking system. It doesn't matter whether the original money came from TD Bank, and I'm just using TD as example. If the original loan came from TD Bank, and then once you're done paying back the loan went to BMO, it doesn't matter where the money, which banks the money flowed towards. It's going into the banking system. It's inconsequential that we call the banks by different names, but overall, there's only one banking system on planet. It's the central banking system. The issue here is how much of the banking function do you control as it relates to your needs? Remember, there's one pool of money in the world. Money follows the sun. Bank in Japan may lend money to somebody who is living in London, UK. Bank in Japan lends money to somebody who's in London, UK, ends up in the bank in London, UK. And from there, perhaps it ends up in the bank in Toronto. And from Toronto, it goes into Vancouver. So the money has followed different names, different exchanges, different rates. But overall, there's only one pool of money on planet. No different than how there's one body of water on planet. It's inconsequential that we call the body of water by different names. We call it Atlantic Ocean, we call Indian Ocean. We see it from geographically, we see it as different names, but overall, it's just the one pool of money, everything, one pool of water, everything is connected. There's only one body of water on the planet. The water evaporates, forms clouds, and wind currents move the clouds around, and then it precipitates as rain and ends up right back into the lithosphere, and the water is in constant motion all the time. Now, what happens if the water stops to circulate? We die. What happens if the money stops to circulate? Well, economy dies. The function of the banks are to put the money in motion and keep that money in circulation all the time. Otherwise, the economy crashes. That's exactly what happened in 2008. Whosoever controls the money controls the motion of money and accumulates wealth. And that someone should be you. You need to be the one controlling the function of money in your life. Money is flowing through everybody. The question is, how much of the flow of money are you truly controlling? Now, what Nelson saw that he was pumping money into the pool the wrong way. He had to go through bankers, tall takers, gatekeepers who were all making money off him and abusing him. Have you ever, you must have already, if you haven't, just do this as trivia. Just go to bank, doesn't matter where you bank, just go to a bank and say, hey, Mr. Banker, I want to make a withdrawal of $20,000 of my own money. Well, the first thing the bank is going to say is, well, sir, ma'am, may I ask, why do you need the money? Because they don't want to hand off the control of money to you. They would rather propose you with some alternatives. Maybe they'll help you out with giving you a loan at a low interest rate because they always want to maintain the control and use over your money. Has this ever happened to you where you had to go get your own money out from the bank and the bank gave you some hard time and say, hey, you know what, go make an appointment and come in because the money isn't here? Or, hey, by the way, rather than taking your own money out, maybe you can borrow money from us as low interest rate and use the money for accomplishing your objective. Has that ever happened to you? Nelson realized that what he needed to do was to crank up large life insurance premiums at that time because he wanted to truly eliminate the bankers, so-called the snakes and dragons, from his life. Now, to do that, he had to create his own banking system first. Now, banks need money to operate. No different than that, if you have to create your own banking system, you have to put money into your own banking system to operate. Now, he's creating his banking system using a participating dividend paying whole life policy. And to do that, he started putting lump sum, a good chunk of money into his policies so that he's able to build up the monies in his policy that he can use to fire the snakes and dragons, the so-called banks and the third-party finance companies from his life. Well, you cannot do that overnight. Everyone thought that Nelson was crazy, including his wife. You have to get it done incrementally over a period of time. The function of banking is not just for next 1 year or 2 years or 4 years. The function of banking is through the end of time. You're going to need money till the end of time, and nothing happens to the flow of money without the function of banking. Someone has to control that function for you. So you have to gradually create that system. And once you get to a stage where you can truly 100% control the function as it relates to your needs for banking, then it's a peaceful, stress-free way of living. And that's what Nelson did. It took him 13 years to get to that stage. You have to recognize that there are 4 characters in the financial play. Now, you may be familiar with the first 2 characters, which are depositor and the borrower. So you are a depositor, you are a borrower. The other 2 characters are the banker and the bank owner. So whenever a transaction is completed, there are characters in the play. And right now you are the first 2 characters only, the depositor and the borrower. Now, when you implement this process in your life, the process of becoming a banker, the infinite banking concept, and in addition to being the depositor and the borrower, you also become the banker. Now, banker is the individual who controls the repayment terms on the loan. And you'll also become the bank owner. Bank owner is the person who makes profit on the interest payments that you are making on the loan. So once you're all 4 characters in the financial play, you will accumulate wealth, and that is possible once you implement the process of becoming a banker in your life.
Hey, Sarbloh, this is a great opportunity to ask a really good question here, because what you're talking about is helping people change the way that they think, right?
Yeah.
4 characters in the financial play. So Nir asks, is IBC still worth it when you can get loans at 3 and 4% from the bank, while IBC, the insurance company might charge whatever percent they charge, 5%, 6%. So I just thought it was a good opportunity to share this right now, because this is all about changing how you think, right, Sarbloh? The process of becoming your own banker is not a function of rates, right?
You're right. See, people can look at it from the rate standpoint, and it has nothing to do with the rate. Rate is in a consumer mind. What the process of banking is all about, who is getting your money and who is in control on that transaction. Doesn't matter if your rate is 0% from the bank, and if you can have a loan at 0%, how much of that money can you re-access again? None of it. So who cares what the rate is? Money is leaving you. Now, if you're able to pay at a higher rate and you're able to re-access all the money that you're putting back as a loan, so who cares about the rate? The function of banking is all about who is getting the money, not the rate.
Well said, Sarbloh. Thanks so much.
You're welcome. All right, let's talk about the golden rule. Now, people have abdicated their responsibility as it pertains to the function of banking to someone else, and that someone else in the character, that someone else in the 4 characters in the financial play is the banker. Banker controls the banking function, and truly because of the golden rule, whosoever has the gold makes the rules. As you're cranking up your own system or system of policies, you're going to have cash. And once you have cash, you have full control and access on cash. And once you have full control and access on cash, then you have the gold and you make the rules. The person on the street in Canada today understands the subject so poorly that he's doing equivalent of living off a heart and lung machine. What I want to talk to you about is how to create a system in which you can control everything about the banking function as it relates to your needs. Someone has to perform that function for you, and someone is going to get all your payments. That someone should be your banking system. Now, there's a reason why 470,000 copies of this book have been sold. Do you want to know why? And the reason why it is because it works. There's a reason why 470,000 copies of Becoming Your Banker book have been sold, because it works. This process works. Now, you will receive a link to order your own copy of Nelson's book, Becoming Your Banker. And once you get that link, you must have received it via text message or via email. And once you get that link, you can just click on it, complete the order form, and we'll ship it to wherever you are in Canada. We ship for less and we ship it to your doorsteps. Get your copy today. The very first principle that you must understand is that you finance everything that you buy. You either pay interest to someone else or you give up the interest that you could have earned otherwise. Every decision you make with the use of money is a financing decision. Either you borrow money from someone like a third-party finance company or a bank, and you pay that person back principal and interest, which is a financing decision, or you accumulate cash in someone else's bank, and once you use your cash, you use your cash for whatever objective you want to use the cash for, the money is gone forever. Once you use your cash, it's been permanently transferred away from you and your family forever. You can never use that money again. You can never earn any interest on that money again. And that cost of you losing interest is called cost of lost opportunity. Now, we are always doing the math on the interest that we have to pay to third-party finance companies because we know the amortization, we know how much interest is going to be, but we never do the math on the cash, the cost of lost opportunity on the cash. You'll be surprised that the cost of lost opportunity can be a lot more than gains that you're making on investments today. There are no exceptions to that rule. The whole idea is to recapture the interest that one is paying to the banks and third-party finance companies for the major items that we finance during a lifetime. And the objective is to keep more of your money in the family. The more money you have, the more money you can use to provide for your family. Money is just a tool. The more you have, the more you get to use. The question is, how much of the banking function do you control as it relates to your needs? And I am going to be repeating this over and over again today because repetition is going to be a best practice today. Your money must reside somewhere. If your money is sitting in your pocket, in your wallet, under your mattress, behind your toilet tank, your money must reside somewhere. Someone must perform the function of banking in your life, and that someone should be you. The process of becoming a banker is not an either or, because it's a process, it's not a product. It's not, hey, should I implement the process of becoming your own banker or should I buy Bitcoin? Should I implement the process of becoming a banker or should I buy real estate? Should I implement the process of becoming a banker or should I put money into the stock market? It's not an either or, it's an as well as. How can I start the process of becoming a banker so that I can now do even better with my financial objectives, whether that's to buy Bitcoin, buy real estate, buy stock market, buy stocks, pay down debt. This process can radically improve anything that you want to do regarding the use of your money. Just one little step that you have to add is to control the banking function, and you can obtain any objective that you have. Your objectives are not going to change. The only thing that we're going to change is the process to get to those objectives. Becoming your own banker is not about addressing a rate of return on investment of any kind. Becoming your banker is all about how do you go about financing the things that you need in life, which can certainly include investments. Who is the one controlling the banking function on those things for you? And that someone should be you. Now let's talk about the grocery store example. Now you must be wondering as to why is Sarbloh talking about grocery store example when we are here to learn the process of becoming a banker? Because what I wanted to emphasize on that banking is a process. Banking is the most lucrative business. It's truly a business. So let's contrast that by another business, which is grocery store. And the reason why I'm using this in this example is because this is a business in which you are not just a consumer of the product, but you're also a distributor and a seller of the product. No different than money. When it comes to the function of banking, you need money for yourselves, for your family, but you can also be the distributor of money to perform or to control the function of banking for someone else. Your market, when it comes to groceries, is unlimited because everybody needs to eat, everybody needs food. And same applies to the banking business. Everybody needs access to capital. Everybody needs cash. So your market when it comes to implementing your banking business is also unlimited. Someone has to perform the function of grocery distribution for you. If you own a grocery store, no different than that. Someone has to perform the function of banking for you, and that someone should be you. Now, getting into any business, so it doesn't matter grocery store or banking, any business that you want to get into, you have to literally invest the time to learn the business. You're not just going to jump into the business, you're going to invest the time to learn the business. Now, in this particular example, let's just assume that it takes us 2 years to learn the grocery store business. That's what you're doing today. You're investing the time to learn the banking function or the banking business that you need to take over as it relates to your need for financing. Now, when it comes to grocery store business, you have to purchase a superior location. 3 golden rules of real estate are location, location, location. Now, you have to buy an attractive building when it comes to getting into a grocery store business. And once you have all that, you have to decorate the building, you have to paint it, you have to put shelves in it, you have to hire and train staff, you have to put IT support. And after all that, you have to stock your grocery store business with high quality merchandise. Now, up until this point, all the way from learning the business, up all the way till stocking your grocery store business, up until this point, if you are starting your grocery business, have you made any money up until this point? No different than starting your grocery business and putting the money in and capitalizing the business. You have to capitalize your banking business and build it to a point where it can truly 100% take over your need for financing. As I was sharing earlier, it took Nelson 13 years to get to a stage where he didn't have to see any banks going forward for any need for financing. The only thing that he wanted the banks going forward was for the convenience of debit card. That's it, not for financing. Now, the grocery store. Now, here's what we've learned in our research. Now, if you look at a grocery store business, now groceries to that business is inventory. Now, grocery store doesn't make money by keeping the inventory sit still. The grocery store makes money by moving the inventory. And here's what we learned in our research. The more you move your inventory, the more money you're going to make. If you move your inventory 15 times, if you put your inventory in motion 15 times, you will just break even. Now, if you end up moving your inventory 17 times, you will start to make profit. Now, if you move inventory 20 times in a grocery store business, then you will have a really, really successful business. And maybe at that time, you can have passive income from the business. No different than that. Think about a bank. What is inventory to the bank? Money. Just like the grocery store, the banks cannot let that money sit still. They have to put that money in motion. So when you are implementing this process in your life, take off your consumer cap and wear your banker's cap and think about what would a banker do. The more money you keep in motion from your banking system, the more wealth you're going to produce in your family.
I think it's a good time for this. So Arlene asks, when is it too late and what conditions are necessary to put this concept to work, becoming your own banker? Let's say you're starting late in life, say age 65, and you have the usual health concerns.
Arlene, that's an awesome question. I'll share with you, my oldest client was 78 years young when they met with me and they implemented the process. And it's been 3 years. And now she just financed her last car using her own banking system. So if you're between age 0 and age 85, we can help you. You're never too late. Now, you don't have to be the life insured to implement this process in your life. We have clients who are not insurable, but that hasn't stopped them from implementing this process in their life. You can always take a policy on someone in which you have a beneficial interest and use that policy to implement the function of banking. In my own family, I have policies on myself, I have policies on my wife, policies on my daughter, and I own the policies in the family. I control the policies. I have implemented the function of banking using all policies. It's not about who the life insured is. It's about, okay, well, let's look at a beneficial interest, and maybe you can have a policy on your spouse, your kids, your grandkids. And that's more a discussion, a one-on-one discussion also with your coach. So I would strongly advise you to connect with our team and have a one-on-one discussion on that. But yeah, you don't have to be life insured to implement this process.
Sarbloh, really well said. And one of the things that you shared with me before when you talked about your 70-year-old client, you said that that client recognized that until the day they die, they have the need for the use of money and they're going to be practicing banking anyway, right?
Yep. Yep. Money has to come from somewhere. It might as well come from the banking system so that they, when they're done paying for it, it goes back into their banking system and they can recycle that money out again and again. All right, let's continue with this grocery store example. Now, this is a grocery store. Now, in the back, this is your storeroom. This is where you just store all the extra inventory, and this is the back door. This is where you stock up the merchandise or the groceries that you need to sell to captive customers. This is the front door. So people walk in the front door, they pick up their groceries, and then they pay for it at the cashier, and then they leave from the front door. And now we have a can of peas, and you will know why I'm using a can of peas in this example. Now, the grocery store owner buys a can of peas at wholesale for 57 cents. You can see that right here. And then they sell it at a retail price for 60 cents. There's not much margin in the can of peas, and in grocery store business doesn't have much margin. It's a volume game, it's a motion game. Now, if the owner of the grocery store increases the retail price to 62 cents, it's not going to impact the everyday customer, the everyday consumer, but it's certainly going to increase his profits by big time. Now, the teaching point that that I'm making in this example is, so think about a loan from the insurance company. So for things that you would purchase otherwise, for which you're borrowing the money from the bank or you're paying cash, rather than doing it that way, borrow the money from the insurance company, which is your banking system. And when you use that money, accomplish the objective of using the money, but pay that capital back to the insurance company. Because the more capital you put back to the insurance company, the more stronger your banking system becomes. And whatever you pay back, you get to reaccess all the capital out again, and even much more than that. So if the insurance company is calling for 60 cents on that loan, well, don't pay back 60 cents, pay back 62 cents. The more capital you put into your system, the stronger your system becomes. Think about this from a business owner's standpoint. Have you ever heard a news in CNBC or Money Sense magazine or wherever you consume all your financial information from, that a company ABC died because it had too much money? In fact, when you put more money into your business, it makes your business much more stronger financially, which means that your banking function, your banking system is much more stronger. And then you can use more of that to do more great things with the money for your family or your business. So you're going to hear me say this a lot today. And what I'm going to share with you is, and I also have a can of peas on my desk here, and I have that for my client meetings. You know, once you understand the grocery store example, the rest of becoming a banker is ridiculously simple. One of Nelson's golden rule is don't steal the peas. So when I do reviews with my client, I always want to remind them, rethink our thinking. And I show them this all the time. Hey, don't steal the peas. Treat this truly like a banking system. Treat it as exactly how you would treat it as if you were borrowing money from a commercial bank. Do not treat your banking system any different from a commercial bank. When you borrow money, have every intentions of paying back, but you control the whole function. You decide when and how to pay back, but don't steal the peas. Here's the problem. Wherever wealth resides, someone will try to steal it. And this is straight from Nelson's book, Becoming a Banker. Now, you must be hearing all these news on, CNBC or CBC or global TV. The deficits will rise up to $381 billion. And this was in the Financial Post. And this is the government deficit. Statistics Canada is about to require Canada's 9 biggest banks and credit unions to turn over high personal data about their customers and not to tell the customers. COVID-19 bill would give Liberals power to raise taxes without parliamentary approval because of the deficit. Now, government is in the biggest deficit ever. And to recover the deficit, they're going to charge more taxes. That's how they recover deficit. So they're going to recover that money from income tax, from goods and services tax, from taxing registered accounts. So wherever wealth resides, someone is going to steal it. Now, when you have wealth residing in a participating dividend paying whole life policy, that is a private contract with private people. It has no government intervention. Nobody other than the policy owner can access money from that system. Your wealth must reside somewhere. What better place to reside your wealth other than this system? And it grows gradually every single day, no matter what happens in the stock market, no matter what happens in taxes, no matter what happens on pandemics. Now, who's the banker in your life today? You are earning all the money today. You are going to your job, whether it's T4, whether you're a business owner, you are always exchanging time to earn that money. Now, when you earn that money, where do you put that money? You're depositing that money in someone else's bank. I repeat, that money is being deposited into someone else's bank. That bank where the money is being deposited sees the money before you do. The bank sees the money before you do. And then once the money is in your account, you're taking that money to pay for the goods and services that you need in life, food, clothes, mortgage, car payments, investing. So you are using that money to accomplish the objective of what you want to use the money for. You are doing all the work, but who's getting all your money? You are doing all the work, but everybody else is getting your money. Your money is leaving you. And the reason why that is happening is because you're familiar with the process of banking. You are the depositor and the borrower. You're just not controlling the process of banking. And the reason why that is happening is because you're not the banker and the bank owner in addition to being the depositor and the borrower. Once you implement this process in your life, you become all four characters. And if you're all four characters, the flow of money is going to come towards your banking system, not away from you. Now, how does that make you feel once the money is leaving you? Something like this? All right, let's talk about two characters here. So, or two individuals. So one is a debtor and the other is a saver. And I'm pretty sure on the webinar we'll have both individuals, a debtor and a saver. And let's just compare both individuals' mindset. Now, a debtor is a person who's always dealing with borrowed money, who's always borrowing money. So what debtor does it, so let's just say they want to buy a car, just using car as example. They want to buy a car, they're always starting in the negative. So they're always starting with the loan. And then they have to pay the loan back. Now, here's the thing. When they're starting with the loan balance, they are not the one controlling the function. So someone else is controlling the function. The banker is dictating what their loan repayment is. The debtor has no choice but to stick with the loan repayment schedule. So when debtor finishes the loan repayment back, he's back to zero. He starts with zero, he's back to zero. If this was a transaction for the car, he will own the car once the car is paid off, but then he's back at zero. He has no money to show for it for all the payments that he's made. And if he continues with the process like this, he's always dealing with borrowed money. He's always ending back at zero. He's always accomplishing the objective of using the money to buy those goods and services, but he has no money to show for it. Now, what he does know is the interest that he's going to pay on that loan. Because as a debtor, he has to qualify for the loan and the banker dictates what the interest is going to be, what the amortization is going to be. So debtor knows how much interest he's paying, he or she is paying on that loan. Now, the other individual is a saver. And the saver has a different mindset, and saver thinks that, you know what, for me to get ahead in life financially, I never want to borrow money. I never want to get into debt. What I want to do is I want to go and save up money. And once I have enough money to use for that objective, I'll just withdraw my money and I'll use my money. Well, first of all, they're saving money in someone else's bank. They're saving money in someone else's bank. And once they have enough money, they'll withdraw the bank. They withdraw all the money from the bank. They would accomplish the objective of buying the goods and services that they need by using that money, but all the money is gone. So let's see what happens. So the saver saves up the money in someone else's bank. And once they have enough money, they withdraw all that money. They're back to zero again. They've transferred all that money away. They can never earn any interest on that money. They can never use that money again. And then they start saving money again for the next objective and they're back to zero. So if you look at the debtor and you look at the saver, ultimately they're both back to zero. The debtor knows how much interest he or she is going to pay on the loan. The saver on the other end has no idea how much interest they're losing on that money because they never do the calculation of lost opportunity. When you pay cash for goods and services, the money is gone forever, not just for your lifetime, but for your next generations to come. The loss is permanent. You can never get that money again. Both methods, whether you're a debtor or a saver, both methods are a permanent transfer of money away from you. Every payment that you make is a deposit into someone else's bank. The solution to all that is becoming your own banker, implementing the process of becoming your own banker, the infinite banking concept. Now, your money must reside somewhere. Now, let's do a thinking exercise again, and I'm just going to stop the screen sharing. And I'm going to involve everybody in this exercise. So think about, so if today you had to create an investment opportunity from scratch, it's an investment opportunity that in which you want to put your own money into. And if you want to design an investment opportunity from scratch, what attributes would you assign to that investment that you're building from scratch? And go wild, just think whatever attributes that you want to assign to that investment opportunity that you're building from scratch, where you want your money to be sitting. Now, what I'll do is I'll just share with folks some of the attributes that I think would be associated with the investment opportunity that I'll start from scratch. So I'm thinking of high rate of return and consistent rate of return. So go ahead and post in the chat box, what attributes would you look for, or the attributes that you will create in that investment, which is best suited for you. Now let's look at other attributes. So, somebody must have said safe or conservative. So I have that as my third point. Now, what about liquid? I know someone shared that in the chat box. Guaranteed, tax benefit or tax-free, no market fluctuation. The investment is not impacted by what happens on stock market. Yields income besides capital gains. Credit protection, inflation protection, control, transferable from one generation to next generation, easy to manage, no hidden fees or penalties, reputable, private. Now think about, so for your own various assets where you have your money sitting today. So for your own various assets, simply identify which of the features from the above list that they do well on, and which of the features from the above list they actually fail on. So wherever your money is sitting today, what attributes of that product do they well on as compared to what you see on the screen, and what attributes of the product they fail on as compared to the features that you see on your screen? And you know what those are. Now, I have a surprise for you. The list of attributes that I shared with you most accurately describes the participating dividend paying whole life policy. The participating dividend paying whole life policy is the best suited tool to implement the process, and the process is called becoming your own banker. Now, we're going to take some time to understand the tool, but we need to focus not just on the tool, but it's what the tool is going to be used for, which is the process of becoming a banker. It's important to understand its characteristics, but what we're solving is the process of becoming your own banker. So the word participating and participating dividend paying whole life policy means that anybody who has this policy, you become a part owner of the life insurance company, and you participate in the profit generated from every line of business that insurance company has. And the way you participate in profit is via dividends, because you become a core in the business, you receive dividend. Each year, the life insurance company declares a dividend. It is contractually guaranteed to be paid to the participating policy owners, and it can never lose value. The life insurance carriers that we use to implement this process, they have been paying dividends every single year since 1848 without a miss. Now, we are in 2021, and insurance companies, that particular insurance companies that we use to implement this process, they have been paying dividends since 1848 without a miss. Now, a company cannot pay dividends if the company is not profitable. So they must be doing something really well to produce profit over the last several 170 years. Imagine the pandemics, the recessions, the inflation that we've had over the last 170 years. And these carriers have been profitable every single year. They must be doing something great. Now, dividend is an icing on the cake. If it's there, great. If it's not there, it's not going to it's not going to impact the process of becoming a banker. It's just an icing on the cake. But here's a track record. They've been paying dividends every single year since 1848 without a miss. Now, whole life means that it's good till the end of time. You are life insured for whole life all the way till age 100. Now, the contractual guarantees in this policy is that total cash values, so I'm going to just use my cursor to demonstrate that, total cash values of the policy must equal total death benefit by age 100. So every day, as you get one day closer to age 100, your cash values keep increasing because the contractual guarantee is that by age 100, cash values and death benefit must be the same. You don't have to live till age 100 to get all those contractual guarantees. You just have to age towards age 100 to get all those contractual guarantees. My net worth, my team members' net worth, and all 1,000 clients that we serve, in these policies, our net worth keeps increasing by the day. Every day we age, we have more cash than the night before. The only investment we have to make is age. It doesn't matter what happens in terms of stock market. Stock market can do this. It doesn't matter what happens when it comes to tax rules. It doesn't matter what happens if there's future pandemics. Your cash and this policy will only go one way, and that is up. It can never be less than what it is today. Now, we don't have many financial guarantees in life anymore. Pensions are going by the wayside. There's doubt about the future. However, a participating dividend-paying policy can help create a peace of mind and unmatched financial security. And here's how. The cash value begins to accumulate and grow immediately, and it is contractually guaranteed to grow. The key word is contractually guaranteed. The cash values can never be less than what it is today. Easy access to and control over the growing pool of financial value that you can use to take advantages or opportunities that'll surely track you down. Nelson in his book says clearly, once you have the access to cash, you become an opportunity magnet. You have the gold, you make the rules. If you have readily available pool of cash that you can tap into, you can capitalize on opportunities. You are not penalized to access it earlier like you are in RRSP, because it is not a registered instrument. It is a private contract with private people. You can access it at any time you want, and there's no penalty for it. There are several tax advantages, both personally and corporately. These policies can be owned by you personally and also in your corporation. It provides a growing death benefit. So the cash is great, but it also has a good sum of tax-free death benefit that will come walking away the day you walk out of planet. There's two possibilities in life, or there's two possibilities 10, 15 years from today, or even longer than that. Either you're alive or you're gone. If you're alive, you're going to be able to spend everything and more money than what you ever can put into the policy while you're alive. And if you're gone, your family will receive that tax-free windfall from a death benefit. So it's a win-win situation. When we implement the process of becoming a banker in a life using a participating dividend-paying whole life, you become a wealth creator. Now, the green line represents the ever-increasing pool of capital, which is your cash value. It grows contractually guaranteed because the cash values must grow every day to match the death benefit by age 100. So this green line represents that daily cash growth. Now, let's just say you get to this stage, and you can probably see that I'm using my cursor here. So the first big, thick green point here. Now, you get to this stage where you need access to capital, maybe to capitalize on opportunity, or maybe to buy a car, or whatever you need the money for. You're able to access money via loan from the insurance company without interrupting the growth of your own money. And when you access that money as loan, there is no qualification. There is no income verification for that loan. The money shows up, no questions asked. So you're able to borrow money from insurance company, and you're able to pay back the money on your terms. You set the repayment terms of that loan. You are the banker in that scenario. As you're paying back the loans, you've already used the money to accomplish the objective that you wanted to use the money for. And now you're not What you're doing now is you're not stealing the peas, you're practicing the process of banking. So you are paying back the loan based on your terms. As you're paying back the loan, your wealth is building up. You're paying money back into an ever increasing pool of capital. And when you're paying money back to an ever increasing pool of capital, you'll be able to reborrow everything that you put back as a loan and plus more, because your cash kept going up over that transaction. At this stage, perhaps if you would have borrowed, I'm just going to use an arbitrary number, $10,000, and let's just say you paid back $11,000 in loan. Now you're able to borrow way more than $11,000 because your cash kept going up all the time. And you can keep repeating the process. Your cash is being built up for future. You're never interrupting the growth of your capital as you're able to practice the process of banking and control the banking function for anything that you need today. Create your banking system. And to create your banking system, we follow Nelson Nash's golden rules. Number one golden rule is think long range. Life is long. You're going to need money till the end of time. Think long range. And Nelson doesn't say just long range in terms of your life, but long range in terms of generations to come, 3 generations past yours. Don't be afraid to capitalize into your policies, because what you're creating is a banking system. Banks need money to operate. When you're creating your own bank, you have to put money to operate. So don't be afraid to capitalize. The more you put in, the more you get out. And don't steal the peas. As you're accessing policy loans, do not steal the peas. The more you pay back into your banking system, the more you're able to re-access again to do more great things with money. And never do business with banks, because when you borrow money from the banks via loan, you're creating a problem called inflation, because banks practice fractional reserve banking. They create money from thin air, money that never existed before. And that's what causes inflation. That is one contributor to inflation. And rethink your thinking. And because it's really easy to forget why we did this. And hence, when you meet with us, and once we determine we have a basis to work together and we help you implement this process in your life, your coach is going to remind you, rethink your thinking. And we meet with the clients like clockwork. You're not going to be doing this alone. We are going to be with you every step of the way. Now, for individuals and families, now here's a testimonial from one of our clients, David. David has been practicing this concept for a few years now. So he says, 2 years after opening our first policy, so he's 2 years into his journey of implementing IBC. He says, we took out our first policy loan and paid off the bank loan on my wife's Subaru. Now, when he paid off that bank loan on his wife's Subaru, the debt was owned by his bank. Now he owns the debt, he controls the debt. And he says, we are redirecting the payments from the commercial bank to our family bank now because the debt is owned by us. He just converted a liability to an asset just by controlling the banking function, because the liability or the asset is the stream of payment. Whosoever is getting the payment determines whether that is a liability of the asset. Money leaving you is a liability, money coming back to you is an asset. So just by controlling the function of banking, he converted his liability to an asset. 3 years later, so 5 years in, we took out another policy loan and skipped the bank entirely this time, and using the money to buy me a brand new SUV. So now he's got enough money because his policies have been well capitalized. Remember, you have to capitalize the system. So his policies are well capitalized, and he was able to completely finance that next car using his bank, not someone else's bank. In year 5, we also had another child. So his family grew, and we took out a policy on him, as well as a second policy on myself. Remember, Nelson says it's about creating a system of policies. We cannot get it done in just one policy. With 5 policies now in force, after 7 years, our mortgage came up for renewal. Instead of renewing with our bank, we took out a policy loan from each of our 5 policies and paid off the mortgage completely. So he eliminated the banks completely. Now the debt is owned by his bank. All the stream of payments that he was sending away from his family is now coming back to him, while all his cash is growing every single day uninterrupted. He just created a stress-free, peaceful way of living by controlling the banking function. If he can do it, so can you. The most common question that we get asked is, guys, can we connect with the right person on Ascendant's team and someone who can take a look at our financial situation and show me how we can become your own banker. And the answer to that question is absolutely yes. And we have created a Becoming Your Own Banker call. This call is designed exclusively for that. You must have received a link. All you do is just click on the link and schedule a Becoming Your Banker call with a designated coach on our team. Just select the day and time that works best for you. Or here's another way. What you can do is you can text the word schedule in cap schedule to the phone number 780-809-4599. And so you can just text the word schedule to this phone number and you'll receive a link to schedule your Becoming Your Banker call with a designated coach on our team. I know, and you should know, that deep down inside, you are capable of becoming your own banker. Now, here's the follow-up that you can expect from us. We will stay in touch via email and text messages. You will receive an invitation to schedule a time to meet and select a time that works best for you. If we don't hear from you, the right advisor on our team will extend you a courtesy call just as a courtesy follow-up. And if you prefer not to meet, just simply let us know. And as long as you leave happy, that's all that matters to us. Now, here's another testimonial from another client, Alan. So Alan says that after 3 years of building our policies, we already had acquired enough cash values that we would, he didn't mean the word withdraw, he mean a loan, that we would loan enough money from our policies to pay off the bank mortgage on our rental real estate properties 13 years early, 13 years ahead of schedule. A policy loan is a private arrangement between you and the insurance company. When insurance companies give you a policy loan, they use your cash as collateral and they put a lien on your death benefit for the amount that you borrow, and they give you the money, no questions asked. The lien is on the death benefit, not what you're going to use the money to buy. So in this particular example, this gentleman, Alan, what he's sharing is we took out a policy loan and we paid off the mortgage on our properties. So technically, he owns the properties free and clear because that loan from policy is not going to show up on TransUnion and Equifax. Now imagine for 1 sec, what can you do with a property that is owned free and clear? Is it going to give you more opportunities or is it going to take away from you in terms of opportunities? Well, I hope it's going to give you more opportunities. And now they've redirected the payments back into their own banking system. The payments that were leaving them are now coming back to them. They just converted a liability to the asset because the asset is a stream of payment. And that was a huge accomplishment, knowing that we were now really, truly using IBC as it was intended. Now, when our oldest daughter and son-in-law decided to purchase their first home, they were able to access a loan from her policy that we had started and also funds from our policies to buy their home. So they had created multiple family banking system. So they were able to finance the house for the oldest daughter and son-in-law completely from the family banking system. And that's a great example of keeping money in the family. Son-in-law and daughter are paying the family banking system back principal and payment. That is how we keep the money in the family. And that property is also owned free and clear. Now let's compare how 99% of Canadians buy cars, and then let's contrast that with the process of becoming a banker. Now, the reason why I'm using car in this example is because it's the most common commodity that we all need, but it's money. Money could be used for any objective you have. So just don't think in terms of cars, think in terms of what are you going to use the money for, and this process can be implemented for that objective. Now, there are many methods that you can use today to buy a car, and each of these methods that I'm going to share are permanent transfer of money away from you. So the first method is called leasing. Now, leasing is a no purchase plan. You're always making payments. The money is always leaving you. The second is post-purchase plan, which is the third-party finance company. So you borrow money from third-party finance company. Well, you have to qualify for the loan, and then you have to pay the third-party finance company based on their rules. They control the transaction. Now, you will own the car once the money is paid back in full, not until then. And the third option is pre-purchase method, where you pay cash for the car. And we know if you pay cash for goods and services, the money is gone forever. You can never own any interest in that money ever. All these three methods, using any of these three methods, you can accomplish the objective of buying the car, but all the money is gone. Now, with each of the above method, you are doing all the work, but all the money is leaving your family and or your business. Someone else is controlling the function of banking for you in those transactions. A couple of questions. Now, let's look at how many vehicles have we purchased in our family so far in a lifetime. Now, purchase meaning whether you paid cash for it, whether you leased it, or whether you financed it. I'm going to get the ball rolling here. I have purchased three cars in my lifetime so far. So 3 for me. What is your number? So please go ahead and share that in the chat box what your number is.
4, 5, 4, 6, 16 plus. Wow.
Dan Allen. Oh my God.
8, 2,
A dozen.
a dozen. So what do we have? Got to be close to 50 now. 13, 6.
So what's the tally now?
I'm going to say
Roughly.
at least 50.
50, right? And what's the,
Rodney, my goodness, over 60. That's
yeah, I'm going to send Guinea's people from Guinea's book to Rodney. So, well, thank you for sharing, everybody. This is really good. So Warren, let's just say what 60 cars amongst everybody,
sure.
just to keep the math really simple. And what would be the average cost of a car?
I'd say 30,000.
30,000. So 60 cars multiplied by 30,000. What is the number? So how much have we on the webinar spent on cars up until a lifetime today? 1.8 million.
1.8 million. Amazing.
Now the question is, how much of that money do you have now? Is this the answer? Because you did accomplish the objective of buying the cars, but you weren't the banker in those transactions. The money has left you. The other reason why we use cars in this example is because here's an interesting thing about financing cars. People are likely to spend more money financing cars over their lifetime than they would ever save for retirement. So if you can just create a banking system to recapture all the money that you're going to spend in cars going forward when it comes to retirement, you're going to be in a much better, stronger financial position as compared to someone who's just going to have the money transferred away from the family and all the cars because they're not the one controlling the banking function. Everything in the life that we do is competitive. If you're making progress, compared to who? If you're not, compared to who? So if you can just build a system to just finance cars and get all the money back, you would be in a much better, stronger financial position when it comes to retirement or passive income time. Now I'm going to share with everybody an example of me buying a car. And I bought this car, Nissan Murano, back in May of 2019. The price tag on the car was $35,000, but that's not what I paid. I paid less than that. That was a price tag. I basically walked in the dealership and it said, give me your best price and then we'll start negotiating. Now, here were my options of buying the car. The first method was I could have paid cash for it. No different than anybody else. I could have financed it. Again, no different than anybody else. Or I could have leased it. But what I chose was, I didn't choose any of these methods. I chose the process of becoming your own banker because I wanted to keep the money in the family while I still accomplish the objective of buying the car. So let's look at the case study here. Now let's go through the process of banking. So the first thing in the process of banking is you have to create your banking system to accomplish your objective. So I capitalized my policy and I'm following Nelson's golden rule. Don't be afraid to capitalize. This particular policy that I started was in 2017 and I used the policy in 2019 to buy the car. Now money must reside somewhere. I'm not changing my money. I'm not changing my objective. I'm changing where the money is going to be sitting. Instead of having that money sit in a commercial bank, I'm putting that money into an entity and business that I own and I control. Now, when I was ready to buy a car, I requested a policy loan for $35,000. Now, what insurance company did was they used my cash values as collateral and they put a lien on my death benefit and they gave me the money. I'm following Nelson's second rule, which is, well, not second rule, but one of his golden rule, which is don't do business with banks. I'm doing business with an entity that I co-own, which is the insurance company. So I took $35,000 as a loan. Now that loan was private between me and the insurance company. And as I used insurance company's money, because that is insurance company's money, my money was growing in the policy every single day. It never got interrupted. My dividends never got impacted by that loan. So that money showed up and I was able to technically pay cash for the car. But I didn't use my money. I used insurance company's money to accomplish the objective. My money was growing. So the price tag on the sticker tag on the car was $35,000. But just because I paid cash for it, I got a better deal and I owned the car free and clear. So I drove the car home and we celebrated the purchase of the car using our family banking system. That was our exciting moment. And we got together as a family. So me and my wife, we said, you know what? We are practicing the process of becoming your own banker. What I'm not going to do is I'm not going to steal the peas. So from our cash flow today, how much can we allocate to a policy loan repayment? And that number was $500 per month. So I look at, okay, I'm going to pay $35,000 back at the interest that insurance company calls for, and I'm going to pay $500. Well, great. It's going to take me 7 years to pay off the loan. Back to the insurance company, that is my amortized schedule. I created my own amortized schedule because I am the banker in that transaction. Now, here's the interesting fact. My monthly loan repayment back to my policy was $500 per month set by me. I control it. I can do it. I can do 1,000. I can do 2,000. I can do zero. It's up to me. So my monthly loan repayment to the policy is $500 per month to my banking system. Now, the moment I was able to pay back $500 per month to a policy loan back in 2019, I was able to immediately re-access $1,100 from my policy again. So just take a minute and just think about what I just shared. I make a loan repayment of $500, but I'm able to access $1,100, and I'm paying the loan back at the interest that insurance company is calling for, which is more than what the banks charge. But the key thing is I'm making way more money than what the interest is going to be. I'm recapturing the interest on the loan. Now, if you had an interest loan per repayment to a commercial bank at 0%, and you were paying $500, none of that money you can re-access again. I'm paying $500 and I can access $1,100. More money I can access, more opportunity is going to create for me. Heaven forbid, if something was to happen, if I'm driving that car and I get into an accident, I will have that benefit paid to me, and that benefit will extinguish any outstanding policy loan, and my family gets the rest. And plus, we have a car that is owned free and clear. So if I live a long life, I get all my money back. I get to reuse everything that I'm paying back as a policy loan. If I die prematurely, my family gets the car owned free and clear, plus the extra death benefit that is going to show up as tax-free to them. Now, the money came to buy the car from the insurance company. My money was growing every single day inside the policy as if nothing happened. I did not interrupt the money growth in my policy. I'm a wealth builder, creator. Now, what happens if I choose to modify my loan repayments? I can, because I'm the banker. I can increase it. I can reduce it. I can take a vacation from it. But if you have that money borrowed from someone else, from a third-party finance companies, can you call the bank and say, hey, I want to take a vacation from my car payment today because I don't feel like making a payment? They don't care. They want their payment no matter what happens. Now, how much of the money that I put towards policy loan repayments I can use? I pay back $500. I can borrow $1,100. I can use everything that I put back and way more than that, because of the attributes associated with the participating whole life policy that we're using to implement this process. I get the car, I have all the money, and I'm recapturing all the money at the same time. If you can do this with cars, you can do it for anything that you need the money for. Remember, guys, it's not just for cars. It's money. It's a process. It could be used for anything that you need the money for. When I access a policy loan, do I have to pay interest on it? I think I already answered that question. Yes, I have to. But see what happens. I pay back $500. I can get access $1,100. Interest is the last thing I'm worried about. In fact, the interest payment to the insurance company is profit for the insurance company. And I am a co-owner of the insurance company. So it comes back to me and everybody else who has a participating dividend bank whole life policy as dividends. I'm keeping the money in my own business. Now let's switch gears here. Let's talk about how we can use the same tool to accomplish the objective of retirement. Now, we don't use the word retirement. We prefer the word passive income, but let's just use the same tool to accomplish the objective of passive income. Now meet Nasia. Nasia is age 45 when she met with us, and her objective, she had a clear objective. She said, you know what, I want to just solve from a passive income. I want to have $39,000 every year as spendable money from age 65 to age 90. So that was her clear objective. When she met with the coach, She shared the objective, and this policy was structured to meet that objective based on what she wanted to start as a premium into policy. She was already putting aside $30,000 every year into some investments and saving, and she just redirected all that money into a participating dividend-paying whole life policy. But she will put that money only for 10 years. So 30,000 for 10 years, she would put 300,000 into policy as premium. From age 65 to age 90, the policy will give her 39,827 every year as spendable income, money in hand to spend. So she puts in 300,000 as premium, and she gets out $1,035,000 in cash flow as passive income. She puts 300K, she gets $1 million. That's way more than what she's putting in. Now, if Nasia passes away at age 91, she leaves behind almost $600,000 as tax-free beneficiary to tax-free death benefit to her beneficiaries. Guys, look at this. She puts in 300,000 as premium. She spends way more money than what she put in as premium, and she leaves behind way more money than what she puts in as premium. If you live a long life, you're going to be fine. You're going to be able to spend all the money and more than what you put into policies. And if God forbid something happens to you prematurely, the family is going to get a family is going to be taken care of because of the tax-free death benefit that's going to show up. Now, ask yourself this question. Is it easier for her to save $300,000 inside a policy, 30,000 every year as premium for 10 years, or is it easy for her to accumulate $1 million in a mutual fund in an RRSP? It's a rhetorical question with an obvious answer. It's easy to save money in a policy than to subject that money to the risk of loss to accomplish her passive income objective. Now, for investors and business owners, now this testimonial is from Tim Dawson, who is the CPA for Ascendant Financial. He's a senior partner at M&P. And the reason why I'm sharing this is, now this is a testimonial for Jason. Now, we get a lot of accolades and a lot of testimonies like this from other professionals just like Tim, because we are an expert and ninja at this process, and they want somebody like us to help their clients, to help solve the need for their clients. So this is just from Tim. He says, over the past number of years, Jason and I have spent numerous hours identifying the clients where we saw a specific need for opportunity, and you can read all that. And in the end, he says, I would not hesitate to put Jason in front of anybody. So not just Jason, but all our teams. We are an expert in this process. And we get introductions from professionals just like CPA all the time to help their business owner clients to implement this process in their business. Now let's look at a preferred retirement solution, or there's not many places where you can put guaranteed. So let's look at a guaranteed retirement solution for a business owner. And in this case, the policy is done in a corporation. So meet Dylan. Dylan is age 45, and his objective is to get $41,000 money every year as income from age 65 to age 90. Now, Dylan is a business owner, so this policy is owned by his corporation. Now, the corporation is depositing the money into policy, not Dylan personally. Corporation is depositing money into policy. So he's putting $50,000 per year into a corporate-owned policy, and he does that for 10 years. So the corporation has put in $500,000 as premium into the policy. Now, here's some facts about policy. The daily cash growth in policy, there's no corporate taxes paid on the daily cash growth. The cash growth is tax-free. The policy is not a passive income asset, so there is no passive income tax on the policy either. Now, from age 65 to age 90, Dylan is able to access $41,000 per year in money in hand from age 65 to age 90, which is $1 million in spendable money personally. He puts in $500,000. Well, sorry, my apologies, not him. His corporation puts in $500,000, but he's able to spend $1 million personally. Our business owners' clients love this process. Now, if Dylan passes away at age 91, the death benefit or the net death benefit in the policy is $806,000. And the reason why I say net is because a portion of that benefit is used to eliminate the loans in the policy, and the remaining is what is left behind is called net death benefit. So in Dylan's case, it's $806,000. Now, when a business owner or a shareholder dies in the corporation, and this is a policy in the corporation, a capital dividend account, which is a notional account, gets created in the corporation at the time of the death. Now, the credit received to the capital dividend account in the corporation is $3.5 million. Now, that is the credit, but the funds received in the account is only $806,000. So difference between what money was received in the capital dividend account and what the capital dividend credit is, there's a difference. There's still credit sitting in the corporation, which means the corporation now can push out more assets from the corporation without paying any taxes. And this is where the business owners get it. So if you're a business owner, this is something that you can also do. Understanding their wealth must reside somewhere. Did this policy take away any of Dylan's options? In fact, it met much more, it went ahead beyond meeting Dylan's objectives by creating all the capital dividend account and the extra credit to push out more from his corporation without paying tax to his estate. Now, thinking about your kids, grandkids, and grandchildren. Now, when I was growing up, I was shared. So my parents shared with me, well, Sarbloh, when you're going to grow up, you're going to have a job, you're going to have a family, you're going to have wife, you're going to have kids, you're going to have your own bills, you're going to have your own mortgage, you're going to have your own car loans. That is what I was taught. You're going to have all your own and you'll know what it takes to manage all that. Well, my parents didn't know any different. But now we change the way we share things with the family. We are not thinking divisive anymore. Our discussions in a family is all about how we can create a family banking system and keep more money in a family, because that's what the wealthy do. Their discussions around the dinner table is all about how do we keep more money in a family? How do we keep more wealth in a family? Now, here's what we do with our clients, and you're going to see that in a bit, is we do family banking systems. We do family banking meetings, and we discuss with family members how family can come to the family bank and use the money to do the things that they want to do and pay the family banking system back. This way, you putting more capital into your family, you're making your family banking system much more stronger, so the family can progress even more. Now, this individual, hey, Varun, is this person invited to family meetings anymore?
That's my favorite uncle.
So this person, I don't know how this picture got into the presentation, but this person is not invited to our family meetings anymore. So in this picture, and I love this picture, I stole this from Jason's slide, and this is a photograph that Jason had taken at one of his family banking meetings. Now, ask yourself this question: how many of you are today doing family banking meetings? Now, here's a discussion that we have with the family. Now, our kids are going to grow up. They're going to need cars. They're going to need money for education. They're going to need money for investments. They are going to need money for their house. The money has to come from somewhere. And that somewhere should be your banking system, the family banking system. We are going to encourage kids to shop at home for money. And when they're shopping at home for money, there's no qualification. Money's going to show up. We will work together to structure the loan repayment with the family, but the rate at which the family is going to pay back the family banking system is non-negotiable. The rate is 10%, because we're not going to think in terms of consumers. We're going to think in terms of bankers, and we're going to think in terms of who is getting the money. The money is in the family. The more we put back, the more stronger the family banking system becomes. If they shop at home for money, they're going to receive all the money that they pay back to the family banking system when we are gone from our death benefit. In fact, they're going to receive way more than what they're putting back as loan repayments into the family banking system. Now, if they're shopping outside the family banking system because they're thinking in terms of consumers, not bankers, because now they're going to some bank and the bank is at 2% versus the family bank at 10%, just to pay less interest, they're shopping outside of family banking system. We will consider that as theft and stealing, and they're not going to be named on any policies as a beneficiary anymore. In fact, all the money is going to be donated to charities. When you have such meetings with the family, what do you think the discussion, what do you think the outcome from the family is going to be? Pay the family back at 10% or shop outside at 2%? You're going to do great by keeping the money in the family, because you're creating a family banking system, and you're going to start thinking like a banker, not like a consumer. Banker thinks in terms of who gets the money. Consumer think in terms of rates. Rates don't matter. What matters is who is getting the money. Over the course of an entire lifetime, think about all the money that has left your family on things like mortgages, investments, cars, taxes, wedding, property, tuitions, business loans, insurance, RVs, business expenses, personal expenses, vacation, sports, hobbies. Think about all that money that has left your family and add up all that money today. Do you have that number in your mind? Now add up all the money. Could you write me a check for that amount of money right now? All the money that you spend on all the things that I covered in the slide. Could you write me a check for all that money right now? And if you're not able to do so, the reason why you've transferred all that money outside this, you transferred all that money away from you because in those transactions, you were not the banker. If you're the banker, all that money will be flowing towards you. You will be able to write a check for all that money because you kept the money in the family. Someone has to perform the function of banking in your life, and that someone should be you. Have the banking process work for you rather than against you. And this is a quote from our CEO, Jason Lowe. You don't have to get a policy or system of policies from us. There are a lot of great individuals out there that you can work with, but please keep this in mind before you select whom you're going to work with. Household and business owners who do this right all have a good coach, and I recommend getting a good coach. Wayne Gretzky had a good coach. Now, as a coach for Wayne Gretzky, the coach was not responsible for him. The coach was responsible to him. No different than when we are coaches to our clients to implement this process. We're not responsible for them, we're responsible to them. And when you choose who your coach is going to be, here are the things to keep into mind. Number one is you have to be careful with which insurance company are you going to be using to implement this process. We have done a due diligence. We know which best companies are suited to implement this process. That is our role. We've done the due diligence. Most people who are selling life insurance today have no idea on the process of becoming a banker. They may have some idea on the product, which is participating whole life policy. They may have some insight on it, but they have no idea on the process of becoming a banker. The process and product are just two different things. The product just so happen is the participating whole life policy, and it's the best suited product to get the job done. But the process is where you get all the coaching from. You should choose someone who is an authorized infinite banking practitioner with Nelson Nash Institute, and here's what it means. Anybody who's an authorized infinite banking practitioner, they have gone through training, rigorous training, before they are even presenting this message to their friends and family and prospect clients. They have been signed off as an authorized practitioner by an authorized mentor, and then they're ready to go. Someone from all our team members are authorized infinite banking practitioners. And when you connect with them, they are not going to share something with you that they themselves haven't been able to achieve by implementing this process in their own lives. Every team member in our organization, we practice what we teach. And we are by far the best at this in Canada. The reason why you should do this today is because you deserve the outcome today. You know, one of the things that we get asked all the time is, Sarbloh, Vern, and other team members, I wish I had known this process 20 years from today. I would be in a much better financial position today. Well, 20 years ago was the best time to plant a tree. Well, when do you think is the second best time? It is today. When I get this question, Sarbloh, I wish I had known this 20 years ago, my response to the question is, well, please don't share this with us 10 years from today or 5 years from today, because you are here today. Today is when you can commit and take action. If you say this to me 10 years from today, then it is on you. Now you have all the time, take all the time you need to get clarity, get questions on this process before you implement it, but be committed. What you are going through right now in terms of learning and being part of this webinar, this is just one part of a process. The second part of the process is to meet with a coach and see how this process can be implemented in your life. Go through that process and then make a determination if this is something you want to implement, but go through the whole process before you make that decision. Nobody from a team is ever going to force you into implementing this process. The longer you wait, the more you're penalizing yourself. The real questions are, what's the cost of not doing anything? What's the cost of just one more year of all your money leaving your family or your business permanently? What's the cost of giving up all the interest that you could have earned today? Schedule your call with us. It is included in this webinar. And when you schedule your call, go through the process that I described. And once you go through the process, then make a determination on implementing this process. Now let's recap. The difference between you getting stressed or staying relaxed financially today is who is controlling the banking function in your life. You don't have to put your money in prison for decades and rely on someone else to achieve the financial abundance you deserve today. You don't have to be rich to become your own banker, because banking is not a product, it's a process. This process looks awesome, but how will I know if this works for me? Well, schedule your call, and that's how you'll know. Click the link that you've already received or text the word schedule in caps to this phone number, 780-809-4599, and you'll receive a link and you can create a time that works best for you. One-on-one consultation with an authorized infinite banking practitioner. You're also going to receive a video series straight from Nelson Nash Institute, which is some more education material on this process. These video series are regular priced at $49.95 US, and you're going to receive all that with our compliments. You will get a clarity meeting. And so this all sounds great, but I don't want to do this alone, but you don't have to. You will get lifelong coaching. And this is just a print screen from our website of all the authorized infinite banking practitioner members on our team at Ascendant Financial. You will get lifetime mentoring. We also have quarterly group client coaching sessions. So you will be invited to all the client group coaching sessions. It's a great opportunity to network amongst other infinite banking practitioners. You will know in those meetings that you're not a lone ranger. You have more valuable resources. So on our website, ascendantfinancial.ca, you'll find more material. Get yourself a copy of the book. This is a great resource on the process of becoming a banker. If you love the YouTubes, like Jason would call YouTubes, you can look into our YouTube channel, which is called The Banker's Vault. The other YouTube channel, which is a podcast channel, is called Wealth Without the Base Rate. If you already haven't, please take the moment to watch a documentary on Nelson. You can go to the website, nelsonnashfilm.com. And this is again a quote from Nelson: "If you understand the problem, the solution will become clear and you will know exactly what to do. The problem is the function of banking. If you understand that as a problem, the solution is controlling the function of banking," and being 4 characters in the financial play. And these are just some testimonials from our clients. They were kind enough to share all that on our Google page. So if you Google Ascendant Financial, you will be able to see more of testimonials from existing clients sharing their own experience of implementing this process in their life. We are very thankful to them. If all this process did was keep more money in your family or business, would it be worth it? Think about that. If all this process did was create a peaceful, stress-free financial life, would it be worth it? The power of commitment. Immediately when you're committed, your brain starts to work on that right away. So the power of commitment, if you're committed, you will achieve many great things. Now you do have options. Option number 1 is you do nothing. If you do nothing, nothing changes. It's your prerogative. Or option number 2 is schedule that call, connect with your coach, discuss how this process can benefit you, your family, and your business, and then make a decision to implement this process. If you're committed, what would you do? Ask yourself, are you committed? Picture a day in life when financial control is in your hands, not a bank, the government, or risky stock market. Picture a day when your spouse says, "Thank you for not making me wait 30 years to enjoy the lifestyle we want to enjoy today." Picture a day when your finances are exactly where you want them to be, and you know with certainty that you have the freedom to travel when you want to travel, relax when you want to relax, and serve when you want to serve. You need the use of money till the end of time. Nothing happens to the flow of money without the function of banking. That flow of money is called transaction, and that transaction is also called a payment. You need to exchange money for goods and services, investments, and many other things that you need in life. In life, guys, payments are not going to end, but you can certainly change who is going to get your payments, and you can change that coming back to you if you're the banker in that transaction. Well, thank you for allowing me to share, guys.
But Jennifer just asked, this is a good question. Anything that we have the need for the use of money for, guys? So she says, does this system work to resolve/pay debts?
It's a great way to accomplish the objective. And our team is a ninja and helps in helping you not just pay off debt. Paying off debt is easy. You can just increase your payments and pay off debt. You don't need our help with that. Where we come in is we're going to show you how you can create money by recapturing your debt, not just by paying off your debt, by implementing this process in your life. It's a great way to accomplish the objective.
Sarbloh, this may be a one-on-one question, but I think I know how you might handle this question. So Irene asks, where is the money usually invested?
That's a great question. So you have to think in terms of insurance company, how they may, what risk are insurance company managing? So when insurance companies collect monies from all the different products that they sell, the risk that insurance company is managing is the risk of premature death. So they cannot speculate with that money. They cannot subject that money to the risk of loss. So majority of the insurance company's money is in fixed income. They also make profit from policy loans. They make profit from the products that they sell. One of the products you may be familiar with is called term life insurance. And here's the stats on term life insurance. Less than 2% of term life insurance actually pays the death benefit over the duration of the term. So what it produces for insurance company is a great profit because all those premiums were paid into the term life insurance, but the benefit was not paid out. So the profits are not just from the investments that they make, which is mostly in fixed income, but also from the products that they're able to sell to the marketplace. Well, guys, thank you so much for sticking around till the end, and we appreciate you all very much. And go ahead and schedule your call, and our coaches are looking forward to connecting with you to see how we can implement this process in your life. Enjoy the rest of your day. Thank you, guys.
Thanks, Sarbloh. Take care, everyone.